it's possible to buy commercial real estate at a bargain price.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Weekly, we share interviews with real estate experts, passing on their experience and knowledge to our listeners. Thanks for joining us this week. My name is J. Darren Gross. We're so glad you're here. In just a minute, we're going to explore the reasons for investing in real estate with our guest, Doug Marshall, and look at 3 uncommon reasons for investing in real estate. Before we do, I want to invite you to subscribe to our program if you like what we're doing. Be sure to, or how to do that, you can go to iTunes or Stitcher. We're on both. And if you go into the search bar and you type in Commercial Real Estate Pro Network, click enter, what you'll see is our logo. It's the headphones with CREPN between the ears. Click subscribe, and this will ensure that you receive all of our episodes and you can listen anytime you choose, whether it be in the car, at the gym, or even at your kid's sports practice. When you do subscribe, be sure to leave a comment. Let us know what you think. For those of you who don't know about me, I am a real estate investor and also a commercial property insurance broker. I've been an insurance broker for 25 years. My primary clients are real estate professionals dealing in multifamily, retail, warehouse, office, and development. Also, I am a real estate investor and have been for almost 20 years. And based on this, I'm always looking for more information about real estate so I can better support my clients and for information to use in my own investing. And that's how Commercial Real Estate Pro Network and CREPN Radio came about. Insurance is a part of any real estate transaction. And when you or your clients make an offer and you need insurance, give me a call. I will do all I can to help. It's what I do. The easiest way you can reach me is you go to either jdarrengross.com or you can also reach me at commercialrealestatepronetwork.com. And lastly, before we get on with the show, if you're on LinkedIn, be sure to check out our group. We've got a LinkedIn group. It's Commercial Real Estate Pro Network. It's a great group of commercial real estate professionals. All right, let's get on with the show. There are many, and I mean many, good reasons for investing in real estate. There have been books written, seminars, how-to guides, there's gurus, and podcasts like this, and much, much more that are all dedicated to the topic of real estate. And while there are some standard go-to reasons for investing in real estate, there are some less obvious reasons. And earlier I had the opportunity to meet with my guest, Doug Marshall. He's an experienced commercial real estate lender, to discuss these in more detail.
Today, I'm delighted to be with Doug Marshall. Doug is the owner and principal of Marshall Commercial Funding. And we're going to get into a topic with Doug here about the 3 not so obvious reasons why investing in commercial real estate is better than owning stocks. And so, Doug, welcome to the program.
Well, thank you very much, Darren.
Before we get started, if you could do myself and the listeners a favor and tell us a little bit about yourself and Marshall Commercial Funding.
Well, thank you. Marshall Commercial Funding is headquartered in Portland, Oregon, and we've been in business for about 13 years. We finance most commercial property types, but focus on apartments, mobile home parks, office, retail, and industrial buildings. And personally, I've been on the lending side of commercial real estate since 1987, and I've been an investor in commercial real estate for about 10 years.
Well, sounds like you're qualified to talk about commercial real estate. So I mentioned today's topic, 3 not so obvious reasons why investing in real estate is better than owning stocks. The title implies that there are some obvious reasons. Can you tell us a little bit about what the obvious reasons, what are some of the obvious reasons for investing in commercial real estate?
Well, there are four well-known reasons for favoring commercial real estate investments over owning stocks. And the first one is that commercial real estate provides positive cash flow. It's a major advantage over stocks. To realize a gain from stock ownership, you must wait until you sell it. Some may say that stock dividends also provide cash flow, and they do. But the problem is that the average dividend yield on a New York Stock Exchange stock is about 1 to 2%, which is nothing to get excited about. So that's the first reason, positive cash flow. Second reason is the 1031 exchange allows the investor to defer his capital gains taxes for decades. And if you sell a stock, you pay the capital gains that year. So one of the advantages, you can defer your taxes for decades, if not basically forever. And then number three is depreciation on commercial real estate shelters income, reducing the investor's income tax burden. And no such animal exists for owning stocks. And then finally, if you use debt to leverage your property, which most commercial real estate owners do, it substantially increases the investor's cash-on-cash return. And those are four common reasons cited for investing in commercial real estate.
Agreed, and those are all reasons that I would agree with, and I think are cited most regularly on commercial real estate. So now that we've identified the four common reasons, let's talk a little bit about the uncommon reasons. Can you lay those out for us?
Be happy to. Well, the first not so obvious reason for investing in commercial real estate rather than owning stocks has to do with the concept of efficient versus inefficient markets. In an efficient market, everyone has the same information. The stock market is an example of what an efficient market is. In an efficient market, you buy at whatever the price is. There is no way to buy the stock at a below market price, at least not legally. And on the other hand, the real estate market is a perfect example of an inefficient market. Price setting is what the seller and buyer agree upon. It has very little to do with the market at large. You make me an offer, and if I agree, we have a deal. It's as simple as that. It is much more advantageous to invest in inefficient market or invest in an inefficient market because you may have information that the seller doesn't have that can make your investment worth a whole lot more than what the seller thinks it's worth. So the first not so obvious reason for owning commercial real estate versus common stock is that it's possible to buy commercial real estate at a bargain price. You can never buy stock at a bargain, only at what is considered the market price.
Would you say this kind of falls under like a value add strategy? I mean, when you say the information, like if somebody knew that rents in the marketplace were greater than what the landlord's currently charging?
Yes, that's a perfect example where it's not, especially right now, with the market as it is and rents going up as quickly as they have in the past 2 or 3 years, it's not uncommon to find an owner of an apartment, for example, who he thinks that his rents are at market, and they're not. They might be $100 or a couple $100 below market. Not uncommon for at least $50 below market. And that makes a huge difference on what the property is worth.
And on that, I'm just kind of curious, would you think also like matters of development that's coming a particular way, like in or near where the property is, or maybe light rail's coming, or there's an employer that's coming with that? I'm just trying to think in lines of what all falls in that category.
Yes, if you were savvy to some insider information as far as how the light rail line was going to be coming into your area before the person who owned the property knew that, then yes, that could make a significant difference in the value. It doesn't have to be something as important as a light rail line. It could be just a variety of different things. Where the path of growth in a particular neighborhood is indicating that in 2 to 5 years that there's going to be a high demand for that particular neighborhood, that could also be an indication of a potentially good buy, because you're buying it when the property is kind of in a neighborhood that's transitioning, and in the future it might be a much more up-and-coming neighborhood that people would want to live in. And if that's the case, then you can charge a little bit more for rents.
I like it. All right, so reason number one we've established. What would we call that? Is that information?
Well, it would be the concept of efficient versus inefficient markets.
Gotcha.
And you can make a profit off of inefficient markets where you really can't on an inefficient market.
Gotcha. All right, so what is reason number two?
Well, the second not so obvious reason to invest in commercial real estate rather than owning stocks is that commercial real estate owners have considerable influence on the outcome of their investments. They can make capital improvements to tired properties. They can change management for those properties that are poorly managed. They can re-tenant the property with better quality and higher paying tenants. They can do a variety of things to improve their commercial real estate. In contrast, as an owner of stock, you're a passive investor having no influence whatsoever on the value of your investment. You are at the whims of the emotions that control the stock market. Your particular stock might be doing well, but if the stock market is on a downward cycle, your stocks are going to go down in price with the rest of the market. We saw that happen in 2008. It made no difference what stock you owned. They all lost about a third of their value in 1 week. You, as an investor in the stock market, are at the whims of the market.
Yeah, I never have liked that about the stock market. And that's very, very true. It's funny, you mentioned the ability to change the outcome or affect the outcome. And I know just in working with customers, I've seen the ability to, like you said, not only change the management, but even control expenses, or maybe a utility segregation, or obviously we talk about the rents, or improve the property and drive rents up. It's almost like you really are going into business for yourself in this this thing, in that you have the ability to affect the income and the outcome, or the income and the output there. I like that. Let's see. I was looking here. Well, I was looking at my notes here, and I realized, again, what you're saying there about the ability. You put the money into it, you can directly affect the attraction to the property, where you can get your higher valued rents, which you can also affect the turnover by making it a more desirable place to live. And all of that transfers to that bottom line, the net operating income, affecting both the up and the down.
I agree. I think one of the obvious changes that's happened in the market in the last few years, and some owners are still not on board, and that's with utility reimbursements. You can now charge back to your tenants a certain percentage of the utilities that are being charged, and that's perfectly fine, and it's accepted within the market. Tenants are now accepting that as an additional add-on, and just depending on where you're located, it could be $35, $55, $75 per unit per month. Makes a big difference on the bottom line, and there are some owners out there that just haven't figured that out yet.
Right. Okay, so you've pointed out we've got two. We've got the inefficient marketplace and the ability to influence the outcome. What is the third obvious, or not so obvious, reason to own commercial real estate?
Well, before I explain the third not so obvious, I need to also say that I ran my talk by my wife, and she was on board with everything I had to say until I got to the third not so obvious reason. And the reason why she couldn't understand it was that it got involved with numbers. And she got a glaze over her eyes just listening to what I was about to say. So that could happen here again with the audience, and I don't want that to happen. But if it does, what we've done to kind of help the situation is, if you would like to download a PDF of this conversation, it will explain in detail what I'm saying to you verbally. You can actually look at it, and I think it's going to be a little easier to understand. And all you need to do is go to www.marshallcfblog.com. Marshall spelled with 2 L's. So you go to www.marshallcfblog.com/3 reasons. 3 being the number 3, and no space between 3 and reasons. So if you go to that particular website, you can download the PDF. So with that, let me go into the third and final reason. I think it actually is maybe the most important. There is no more need for retirement calculators. And what I mean by that, we've all seen the TV commercial where people are asked how much money they think they need to save in order to retire comfortably. And their responses are pretty similar, with a shrug of the shoulders and a bewildered look on their face. They say something like, "Beats me," or something like that. And if your investments are in stocks, bonds, land, precious metals, or other commodities, that's an honest answer. Who knows? It's anybody's guess, including the investment banking company that's sponsoring this TV commercial.
Right.
They can't answer that question either. But with commercial real estate, you can make a reasonable guess as to how much you'll need to have accumulated in real estate in order to retire comfortably. All you need to know are the answers to these 4 questions. The first one is, how much annual income before tax do you need to retire comfortably? What do you want to make to retire comfortably? 2, how much annual income are you expecting to receive from Social Security? Number 3 is, what is the current return on the equity you have in your commercial real estate investments? And then finally, the number 4 question is, how much equity do you currently have in your commercial real estate investments? If you can answer those 4 questions, you can answer fairly well the question, how much money do I need to have in order to retire comfortably? So for discussion purposes, let's talk about a fictitious investor named Joe. Joe says to retire comfortably, he wants retirement income of $100,000 a year. And every year, the Social Security Administration sends those of us approaching retirement age a letter stating what we will receive in Social Security benefits when we retire, assuming that we continue to make approximately the same amount of income going forward. So let's assume Joe will receive $40,000 annually from Social Security. Now, to determine Joe's current return on his commercial real estate investments, he adds up all the disbursements he received last year on his commercial real estate properties. And in this example, let's assume that Joe was able to received about $60,000 in cash disbursements from his commercial real estate. So the next step is to calculate the equity Joe has in his real estate portfolio, and this is where my wife started getting glazed. Her eyes started to get glassy.
I'm tracking so far.
Okay, but it's really relatively simple. To calculate the equity in your real estate, it's just taking the value of your properties less the debt you have on those properties. So let's say that Joe, he owns 2 properties that have a total value of $3 million. And the combined loan amounts on these 2 properties is $2 million. Make it real simple. So the total equity he has in his real estate portfolio is $1 million. 3 minus 2 is 1.
tracking.
Okay, got it. So depending on how good an investor you are, you should be able to generate a 5 to 7% return on your equity. I think that's a conservative estimate on well-managed properties. You might be able to do much better than that, but I think if you're managing your properties well, you should be able to get a 5 to 7% return. In our example, Joe had cash disbursements of $60,000 on total equity of $1 million. That represents a 6% return on his equity. So for the discussion purposes, let's assume that Joe's commercial real estate portfolio going forward also has a 6% return on his equity. Now let's do the math. Remember, he wanted $100,000 of annual income that Social Security was going to provide $40,000, so that leaves $60,000 net needed from commercial real estate investments. And because of that, you take that $60,000 and you divide it by 6%, it means that he needs to have $1 million in commercial real estate in order to be able to retire comfortably. He would have enough money from both Social Security and from his commercial real estate investments to live comfortably. And that is exactly, in our example, what Joe has. Joe will never have to worry about running out of money as long as his properties are generating 6% annually. And you may ask, what happens if there is high inflation? Well, if that happens, if rents over time increase with the rate of inflation, he'll be fine. Now let's look at investing in stocks. To live off your stock portfolio, you have to slowly over time liquidate your stocks. And since you have no idea how long you will live, there is absolutely no certainty that you have enough assets accumulated to live comfortably into your retirement years. Getting back to that question that from that TV commercial, do you have enough money how much money you're going to need to retire comfortably? There is no way at all to be able to answer that question. But Joe could live to be 120, and he won't have to worry about running out of money. He'll be fine because Joe never has to liquidate his assets in order to pay his bills. He lives off his cash flow, not his equity. So those are the three not so obvious reasons for investing in commercial real estate.
I like it. The last one is kind of the aha that I've had over the years in investing in real estate. And I think for myself, I've kind of come to look at it as like a pension, from a standpoint of once I understood the difference between a 401k and a pension, the 401k has the liquidating factor, that you referred to. And I don't think a lot of people, when you're going forward and you're working and you're trying to accumulate your wealth so you will have something to retire, you don't really understand that when they flip the switch and they start making you take that money out and pay taxes on that deferred income. And but with the real estate, I mean, it's a growing asset, and whether it be through just natural appreciation or as the rents go up, I mean, and specifically in commercial real estate, as the rents go up, the value goes up, and that just continues to track, like you're saying there, and that you can essentially not outlive your asset as long as it's a performing real estate asset there.
I think that's the real advantage, is that once your property begins to cash flow, you receive this cash flow in perpetuity. And not only that, if you keep an asset for a long period of time, it isn't going to stay at a certain amount. It will gradually increase because, if nothing else, you have your debt on the property is fixed for a period of time, where your income goes up gradually, so do your operating expenses, but the other portion, the actual mortgage payment, stays the same. And because of that, you gradually go from a 6% return on your equity to a 7%, to an 8%, to a 9%, and it goes on from there.
Right. It is it's funny. I think that everybody gets to that aha moment when they get to it, but it is a beautiful thing when you realize the power of real estate and the appreciation and just the continuous increase there. Well, Doug, this has been enlightening. The three not so obvious reasons for investing in real estate. Is there anything we didn't cover on that I should have asked you?
I can't think of anything. I just would say, again, if you're starting to have your eyes glaze over on the third reason, go to my website. Go to www.marshallcfblog.com/3, the number 3, reasons. I'll give it to you one more time. www.marshallcfblog.com/3 reasons. And you can download a PDF of this conversation so that you can maybe better understand what I was trying to convey under the third reason.
And we'll put that in the show notes below, so there'll be a link there for anybody to click on that.
Perfect.
Got it. Well, Doug, this has been great. I really appreciate the opportunity to have the conversation, and I thank you for sharing the 3 not so obvious reasons for investing in real estate.
Well, thank you for inviting me.
3 more solid reasons to invest in real estate. Take advantage of the inefficient marketplace, the ability to influence the outcome, and also the elimination of the need for a retirement calculator. Remember, Doug mentioned if you would like, you can download the show outline that includes the explanation of how the numbers work on that retirement calculator. You can go to Doug's site. That's www.marshallcfblog.com/3 reasons. And it's listed in the show notes. You can click on the link below. Before we get out of here, I just want to give you one more reminder. Be sure to subscribe to our program, and that way you'll know exactly when a new episode is posted. We know you're busy, and again, we thank you for making time for us today. We really appreciate you. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.